All right, guys, thanks for being patient. I trust you can hear me. My little green microphone thing is going off. But just to make sure, give me a little thumbs up, whatever. Sorry for the delay. Good, good. All right, guys, getting right into it. Welcome to the Hurley Investments Trade Findings and Adjustments of June 15th, 2021. Nice to be with you this evening. Let's see. So this bit here we talked about last time, say Thursday, wasn't last Thursday because I think we had to cancel, so I think it was the 3rd. So beginning of the month, we had good jobs numbers and the market was not really caring about it. It's like up is down, good is bad, front is back, and what other opposites can we name? Sometimes that's how it is, and how the market can just be a little irrational. Let's see, we went through why would the market ignore good news? It has been positive in the past. S&P moved close to test all-time high. That was back here. So we're really talking about the 3rd. That was this day. You can kind of see market fell and then came back later in the day. So kind of puts it in context. And here we are, jumped up the next Monday and once again at all-time highs. So what do we got to worry about this week? I'm sure I wasn't at Kevin's market commentary yesterday, but I'm sure he's mentioned the Fed talking Wednesday as something to look out for, of course, and talked a little bit about Jpmorgan. Kind of want to piggyback off of that a little bit. My thoughts were, let's see, we're in the summer doldrums. So what would be a good strategy for this period right now? That's a question for you guys. Summer doldrums, what is the strategy we should be looking to utilize? Of course, I don't know how to spell doldrums. There we go. I'm gonna pull a frowny face. Oh, brother. Any thoughts, guys? What strategy for the summer doldrums? What I mean by summer doldrums is typical summer movement where there's not a lot of action, up or down, kind of sideways more. Ida says, go where there is no internet. If you're talking about some little beach in Cancun, I might agree with you, Ida. I can get on board with that. Getting the hell away from this ridiculous stock market. Not a terrible plan. It's not the worst plan. You could do worse. Any other thoughts? By the way, Ida, I like that one. As far as investing and trading, though, for those of us that really kind of have to be around internet and do our jobs and whatnot, what do you guys think? All right, William, I like that, and that's kind of where I was going. William says, covered calls. So one problem that I've looked at, problem with the covered call is this. We're not the lowest VIX we've ever been on record. Still isn't the 10 to 12 that we saw in 2017 and 2019 and so on and so forth. But that's kind of par for the course for a somewhat flat moving market. I say flat, and we're, of course, S&P is up at all-time highs. But it's certainly not months like this one or months like this, weeks, I should say. We're not doing crazy drops like this at the moment, some smaller movements, and it is bullish on the S&P, but a lot of stocks are somewhat sideways. So what have I looked at? Let me type this in. VIX lower doesn't help, but that doesn't mean we can't find some credit. So first one I wanted to look at, I had Apple out here. Apple has broken out above the 50-day, which is a nice bullish sign, is turning bullish. So you might be thinking, all right, well, if it's bullish, Keith, why would you put on a somewhat bearish sideways trade on a bullish stock? And really the only reason is if you're looking to put money to work and get in for a quick couple percent in about a month and getting called away. And that's really it. If you already have Apple, I don't know that I'd look at capping it really close to the money where you'd get more credit, which is what I've been looking at. And I don't know that you'd want to, well, let's take a look. I had Jpmorgan up here. Let's look at Apple. I guess I'm just kind of thinking through if you already have shares versus putting on a covered call specifically to get called away now, or at least I guess not now, but the next month or so that you could have this. So looking out to July, so $3 of credit looking at this analysis. So you're in it for about 12,500, just a little over. So just doing the math, 339 divided by 12, 661. So my math tells me that's 2.6, almost 2.7 if you round up, return in about a month, a little over a month. We're not quite at a month, but pretty close. 2.6% in a somewhat sideways market, on a somewhat sideways stock in a sideways summer doldrums time period. Kind of like this more for a newer trade, as if it's if we're considering, you know, managing stock you might already have. I wouldn't cap it, certainly not at this level unless you're totally okay with getting called away. I might look at something more like a 135. You don't get a ton. Again, we're at lower volatility, but 135 does get you some level of comfort where if it does get up, it's going to have a tough time over the next month to get over 135. But for right now and today, we're really just talking about this, getting that 2.5 or more percent and booking a relatively quick and boring profit. Boring is not the worst thing in the world. There's those. Let me get those here. So my thought is Apple, once again, so you'd be buying it just under 130. It's saying 129.70. You can see in the extended hours just down here. I don't know if you guys can see that or if it's a little small. Just have to take my word for it. And then July. Monthly 130 strike for over $3. I'll say 310, split the difference there. So Abraham said range bound strategies like calendars and flies. Yeah, so no problem, Abraham. Abraham's talking about other strategies. Calendar spreads could be an interesting idea, but still be looking at further out in time and something you can book sooner. And if it doesn't go the right way, you have more time. So I would still look out a year. At let's see, if we were to look at calls here, calendar, getting terrible internet, unfortunately. Don't know why it's like this. Give me a second. Goodness, I need to fix some stuff here. Well, Abraham, it's not really cooperating with me. I can't really talk about this too much. If I can just do 8 strikes. Helps a little bit. So we're gonna do a calendar spread, something like at the money on a June 22, next year, June. So that gives us a year. And maybe something like this. Gives us a little bullish. Then you're kind of stuck in it more. I think if you're going to go long term, which is what I would look at, you would look at more of a covered call rather than a calendar. That's just me, though. Interesting idea, and you certainly could keep it in mind, but I'm going to go today with the covered call. The other one, and just for I guess thoroughness sake, this was one report that maybe why Apple jumped a bit. New watch will analyze your blood. Planning on new features, the Apple Watch coming in the fall. Apple Watch Series 7. Has a bunch of new health scanning stuff, scan temperature, wearer's body, measure blood sugar levels. Who knows if this was really what it was. Maybe it was just Apple buying their stock back. Tons of news. Apple Beats unveils Studio Buds. Apple's urging owners old iPhones to get the software. It's not important. Let's see. podcast subscriptions. That's not good news. Yeah. All right. Can't really find anything that jumps out other than this, but I don't know. It doesn't feel like a great reason why Apple jumped today. So this will be a 2.6% return. The other one I looked at was Jpmorgan. Let's go to Jpmorgan. As I mentioned, Kevin had talked about that a little bit yesterday. As far as the chart goes, there's nothing that says particularly that this is sideways. This is a bearish stock, it looks like, technically. But what I'm thinking is we have a resistance level here that should act as support, and that's kind of exactly where you see. Let me zoom in a little bit where this S1 pivot point is. And this one has a lot more to do with Jamie Dimon talking about it, talking about Jpmorgan Chase the other day. I won't go too much into this because obviously Kevin talked about it more in depth, but my thought is they have 500 billion in cash. He says they're waiting for opportunities to buy, to invest in higher rates when interest rates go up. And part of the reason it fell down was Jamie Dimon talking about stuff, and investment banking revenues headed about 20% higher than a year ago and could be one of the best banking quarters. Where was he talking about? Let me see. Here it is. Bank expects 52.5 billion net interest income in 21, down from 55 billion it thought it was going to have from back in their reporting in February. So my thought is, I wonder if maybe they're trying to drive their own stock price down a bit to buy back shares, because they're not, especially Wednesday, if the Fed continues to hold pat on raising interest rate levels. This could be a good time to get into Jpmorgan. Obviously, if it's down further tomorrow, you'd want to wait. In fact, this might be more of my trade for Thursday morning, if you want to join then, just because I want to see how this reacts with Wednesday's Fed meeting, and it's not exactly at a wonderful spot where we'd think, oh, this is bullish, or really anything other than it could be more bearish or hold the support level. So I'd rather kind of wait and see where it holds. But just for kind of looking at it and the purpose of looking through the option, go back to E-Trade and look at Jpmorgan. Actually, I'm just going to do, never mind. Here we go. Jpmorgan. So this one's a little tricky because extended hours, it looks like it's heading up a little bit, which puts it at 155.29. And to really get any credit, you kind of got to be at the money. But if we have enough credit and we're called away for a profit, net profit from the strike, we're still okay. So 155, we would get nearly $4 of credit. So we'd make max profit 370, max loss or total risk would be 15,130. So 370, just to do the math, divided by 15,130. That puts 2.4%. So fairly similar, would require more money, but I'm not going to post this one just because, again, I mean, you could look at it, take a look at it tomorrow, and if it's down, just be patient and wait. We've got the Fed meeting that will most certainly affect Jpmorgan and swing it around a bit. So I would be more willing to wait until Thursday. So, but just to kind of show you what I'm thinking. So what I'll say is, I'll say it's at a support level, but needs to confirm. My suspicion, ooh, I got it. This is that Jamie Dimon talked the stock price down and may utilize some of the 500 billion. I am going to do that in all caps. Cash to buy back stock. I'll just say shares. Okay. So I'll say keep an eye out for covered call at the money for lots of credit. We'll follow up with this one again Thursday. but certainly out there if you want to look at it tomorrow, where there might be a little more credit and volatility. But if it's down, just know that you can be patient. Any thoughts or questions? Pretty simple thoughts today. Move back up here for the Apple one. Again, this is just something if you are totally okay with getting called away from Apple. I definitely wouldn't think about covering Apple shares if you're a long-term investor in Apple and already have stock. But if you have the cash and can do this, it's a 2.6% return in about a month. All right, guys, I'm not seeing any questions come over. Last chance going once, twice. Jim, any thoughts on Boeing? Yes, my thought on Boeing is stupid things should just go up because they just booked another contract to sell a bunch more planes to Southwest, and why on earth isn't it cooperating? That's pretty much my thoughts. So as far as managing it right now, I've specifically because the news has been good and I don't see why Boeing wouldn't continue up or can't continue up in the over the next months. I haven't worried about protecting it or capping it for the last couple weeks. I mean, there's still so much opportunity. I don't understand why it's not up at 300. Let's take a quick look. Let's see. US and EU agree to suspend Airbus Boeing trade fight. That would be good news. Boeing Airbus get trade truce, that's the same thing. Pretty much as far as anything I can remember, the only negative thing has been what's his name, Calhoun, the CEO, saying they need to see China start buying airplanes to really get cooking back to previous highs. But that's really it. Just kind of scanning here. Yeah, not much else to tell you, Jim. But it does make me want to swear. Just go up, you blippity blippity bleep. Guys, any other thoughts or questions? Jim, sorry I couldn't be more positive about that, but that's kind of all I'm seeing and thinking about. But if there's no other questions, guys, I really appreciate you joining me tonight. Try to keep it short and simple tonight, and it probably will be similar on Thursday, but let's reconvene about Jpmorgan and see what other opportunities there might be, and talk about the reaction of the Fed meeting, and we'll go from there. Thanks for being with me. Have a good evening. Take care.